Well, good evening, everybody. It's Blair Nightingale here for Market Monday. Told you we'd be back. We're back. Today, we're going to do a special episode. I'm going to give you, obviously, we're going to go into the markets. We do that every week here on Market Monday. That's why we call it Market Monday. So, hello to everybody out there, Facebook, YouTube, our friends who are with us in the Tradeway program. And those of you who are joining us, maybe for the first time, you've never been here before, you're just interested. What is the stock market? What is trading? How do I make money in the stock market? Can anybody do this? Can I learn this? Can I do it from home? And the answer to all of those is yes. And that's what we do here on Market Monday, helping you break down the confusing world of finance so you can understand how this can fit into your life. It is a learnable, practical skill set. It is never guessing, gambling, or going for it. That is not trading. That is something different entirely. So tonight, I actually want to dig into that a little bit. It's been a while since we've done kind of a good solid overview of what makes trading trading. How do people make money doing this, right? For a lot of folks, this is very foreign. This is something that we've said, well, Wall Street does that. Don't even know what they do. But it's not something I can do. And that's not true in 2023. Of course, I can't ultimately make that determination. You have to make that determination. But I'm here to help you see what you can do to step into something that maybe you didn't think you could do, because it is a learnable skill set for sure. I want to touch on that. Of course, every single week, I basically say three things. The first thing is welcome. And I would love to hear from you guys. If you want to drop a comment in that chat box there, Facebook friends, YouTube viewers, please go ahead and do so. If you have questions as we go, I always check for those as well so I can answer those live on air. That is the benefit, of course, to our friends out there who are watching this by recording. I know there are many of you. So good evening, good morning to you guys as well, whenever, wherever you are, okay? That said, I do want to jump over to the markets. Had a little bit of a pullback here the last few days. Now we're looking at NVIDIA here. So let's get over to the S&P 500 here in Charts by Tradeway. Now what's interesting here is that we had a nice little uptrend going here at the 20-day moving average. You can see it moved up, pulled into the 20, bounced, down to the 20, bounced, down to the 20, bounced. Long time, right? Took a long time up there. Long time is relative, but it did stay hot for quite a while. A move into the 10-day, up from there, a move into the 20, and we actually broke the 20-day moving average last week. Finally, some profit taking in there. There was a downgrade, okay? The U.S. debt rating, essentially, right? To put it very, very simply, you have a credit rating, right? You and I have a credit rating, and depending on the kinds of things we do with our credit and our money, the reliability that we show over a period of time, we get a certain score, right? We get a credit score. How trustworthy are you, according to all this data, if we loan you money, that you're going to pay that money back, that you're going to be able to handle that loan? Well, the United States as a nation received a downgrade in their credit. There are mixed opinions, as always. Anything political, anything financial, there's always mixed opinions. This isn't actually going to mean anything. The CEO of JP Morgan says, this isn't even going to be a big deal. Where you have other people saying this is actually a massive deal. For example, somebody like Kevin O'Leary, I watched just the other night, saying it's actually a huge problem, right? And it's indicative of an even deeper problem, which is that partisan divide in our nation politically, because part of the downgrade that was cited was that we keep kind of coming to the brink of defaulting on our debt because we have to raise the debt ceiling in Congress every time that happens. And then there's a tug of war, there's a battle. We get close to the edge, we pull it off before we get over the edge. But it seems to be a consistent pattern that's just not as reliable, downgrading the U.S. Essentially, again, credit rating, and the kinds of implications that could have on our money, on loans in the future, trickling down to you and I, impacting that. But the markets in particular responded to that when you see this gap down here. See, stocks can gap overnight, up and down. And we have rules in our system because there are certain times when gaps, they aren't guaranteed. There's never a guarantee in the market, but they are very likely to happen. They happen most times. So we have a couple of scenarios that we like to say, hey, we don't ever even trade in this environment because there's just too much chance of a gap. Okay. Earnings reports is a good example of one of those. Earnings reports is simply something we just don't trade over. Now, you can hold a long-term investment over earnings. You would still do that, but as a trader, different skill set. You would look to actually exit or not even get in a trade when it's close to earnings to begin with. We saw a gap here and then a gap there. Now, when a stock breaks its pattern, okay, it changes what we call the premise of our trade. We're looking at patterns to get an edge. If I say to you, square, square, circle, square, square, circle, square, square, what would you say next? Right? Now, you could make a guess. I haven't told you what the answer is yet. You could make a guess. You could say anything you want. Square, square, cat, if you wanted to. But what happened? Well, I repeated it multiple times and I gave you a pattern. So you might say square, square, circle, and just follow the pattern. Well, stocks make patterns as well. Stock makes patterns as well because it's human beings and even human programmed programs that buy and sell, and we see patterns happen in the markets all the time. Here is what we call an uptrend. Now, it broke that pattern, but even though it broke that pattern on the S&P 500, remember, this is for traders. Now, when we're investing, we're going to look at a lot more of that macroeconomic condition, meaning what's the big picture in the economy and where we're going over the next 12 months. Here, I'm looking at a trading skill set. So I'm actually looking to use that pattern to decide whether or not I have an edge or I do not. When it breaks through the floor, which we call support, floors are a support for us. It breaks through the floor. And then even though it's no longer in the pattern, I'm still using that pattern to make sense of the price. Because if it's below that, then it's weak. Now, it's not dropping like a rock, okay? It's not heading straight down, but it's not in the pattern. So I don't want to buy this stock. It's not ready. It's not in a good spot to buy. Now, it might go up again tomorrow. It went up a little bit today, but it's not enough for me to want to actually take an actual trade because it's going to be something that doesn't give me enough edge. I need to see it in the pattern. Okay, it's below the pattern right now. So on the S&P 500, this is something that gives us a really good indication when there's a pattern present, but the stock is no longer in the pattern. That's still really important information. It tells me to hurry up and wait. If I go over to the NASDAQ, okay, we had a pattern here at the 20-day. It did a very similar thing. It did a smaller high, which that's very important. It broke down, and now it's just kind of chopping sideways, isn't it? Right? It was down, then it was up, then it was down, now it's up. And you say, well, man, the market's really confusing. It's just going sideways. As a swing trader taking these swings in the price, which are these peaks and valleys here, okay, it's not giving me much to go on. There's not much for direction. Okay. And that's actually the answer you need. If it's not giving you much for direction, then it's not at a good spot to trade anyway. It's okay as a trader to say no way more than you say yes. You don't want to swing at every pitch. The market is moving all the time. Okay. That's what I call price action. You and I can go out to the markets at 8:30 Central Standard Time tomorrow, and we'll see those charts moving around and those prices moving around. And to the untrained, undisciplined, okay, does not have a trading skill set developed, you will feel the inclination to say, every time that stock moves, that's a spot I could have made money. But the reality is we're not looking for price action. We're looking for price edge. When risk is as small as we can get it, potential profit is as big as we can get it. When we see that and we hone in on those opportunities because we have a system that teaches us how to take advantage of those opportunities, that's when we've shifted from guessing, gambling, and going for it to a real trading skill set. Okay. Now, Joseph, interestingly enough, is jumping in and saying, hey, what are your views on the stock GE, which I am going to look at tonight. All right. I am going to look at that tonight. Now, there's a point I wanted to make first, because here, like I said, on the index, this is a good time. You say, well, does that mean that there aren't going to be any stocks out there at all that go up tomorrow? And of course, that's not true at all. There'll be lots of stocks that go up tomorrow. There'll be lots of stocks that go down tomorrow. Okay. But looking for a reliable, consistent, repeatable pattern on the S&P 500, or in this case on the NASDAQ 100, it's not there right now. It's not there right now. And that doesn't mean we can't make any money. It just means over time, if we took opportunities without a pattern and the predictability that that can help, I should say the probability that that can help with, then we'll find that we're trading without an edge. And that does not create consistency over time. Okay. So we really need to understand that basic principle. Here's another basic principle of trading. Okay. It's foundational. And those of you out there tonight that have traded before, you understand what I mean when I say this. You have to understand the emotions that play into trading. I won't give a full breakdown of the different pitfalls. I usually talk about 10 pitfalls of the emotional trader. We don't want to be the emotional trader. We want to be the disciplined trader. First thing I ever felt like the Holy Spirit told me about trading was, Blair, the mark of a trader is discipline. Not just somebody who has a brokerage account. Anybody can have a brokerage account. But if you want to grow a brokerage account, you've got to have discipline. Okay? Got to have discipline. And understanding the emotions is a big part of that. Now, I talk about how most times, most systems, programs, gurus, teachers, which, by the way, I am not a guru. I don't think of myself as a guru. This isn't about that. It's about helping folks like you, just regular folks, want to learn a skill set in the markets. Okay. It's a real skill set that we have to apply ourselves to and learn. Okay. And it's something that a lot of people use to actively trade and build a business in the markets. Okay. So that said, you have to understand that most of the time what gets talked about is what I call the road conditions, which is the market, which is what we're looking at right now, right? Obviously, we're looking at the markets as a whole. When we say market, we really mean the indexes. Market index. That's important. Okay. That's important. But they also typically talk about what I call the car, right? The road is the markets. The car is your trading system. We need an edge. We need a system. We need a vehicle to get us further, faster with less work. Okay. Better tires, better handling, better engine, right? Better safety rating, better visibility, better go down the list from there. Okay. That's the car. That's the trading system. Okay. With no car, you can't take advantage of the road. You can't get on the highway. You can't get in the fast lane. Can't do it. You don't have a car. Okay. But what's the most important factor here? The most important factor is the driver. Most important factor is the driver. You've got to have an idea of how the driver is impacted. We don't train the car when we are 16 and we learn to drive, do we? We don't train the road. Now, hopefully you have a car that the brakes work, right? So it's not that the road doesn't matter. It's not that the car doesn't matter. It's huge. But the biggest thing we need to develop is the driver. It's the driver. So even though I'm just giving a window into this tonight, it's not my intention to go into a full-on presentation regarding trading emotions, I want you to know that trading emotions primarily expressed in fear or greed, okay, is really the learning curve of trading. If I've got a book on my shelf right now and I've been referencing it a lot lately, it says if how-tos were enough, if how-tos were enough, we'd all be skinny, rich, and happy. Okay. Whatever your design, whatever your desire of happiness looks like. Okay. There are a lot of things in life that we can logically say, I'm going to do this, I'm going to do that, I'm going to do that. But how many know that emotions come into play and they create difficulties, right? If we don't understand how those emotions play out in that situation, particularly in the markets, fear and greed. So we have to understand that it is a learnable skill set. We need price edge over price action, but we have to understand not just what's going on in the markets, but what's going on in you and me. Okay. That's important. Okay. That's important. Now, back to Joseph's comment, specifically saying, hey, let's look at a stock out there. And that's exactly what I wanted to do tonight was go out and look at a stock. So if we pull up GE, what happened with GE here? Well, it's funny. We've been following GE for some time now, and it just keeps using the same pattern. I actually had some students on a what I call the Insider Plus webinar. It's one of our coaching programs here at Tradeway that we do on Wednesday nights with our students. And these students came on last Wednesday, and we talked about several different things in terms of our skill sets. But we looked at, obviously today we have Monday, okay? So then we've got, it's actually right here, Monday, Friday, Thursday, Wednesday. So Wednesday night, the stock was right there. Now, it wasn't at a floor. It wasn't at support. It wasn't bouncing. But this is something that we said, hey, let's watch and make sure that does or doesn't bounce. Whatever it does, that we're aware of it. And then, come back to the markets this morning to see. I was out late last week, come back to see, hey, not a half bad bounce here at the support level. In terms of an actual entry on something like this is where we really need to understand the system that we're trading, okay? And some of the emotions that will come in, because we go extensively into helping people understand, even though I see a pattern, there are things I need to know how to do when I see a pattern. It's not as simple as just pulling up two lines. Now, that helps tremendously. And I feel like it can help people, like it helped me, go, hey, I think I could actually learn how to do this. If this isn't about an Ivy League degree in macro and microeconomics, and I have to work for a big bank. No, this is something that we can use the tools and the skill set in our own lives to learn how to do. Patterns is a part of that, but it's the start. Pattern isn't the end of the beginning. It's the beginning of the beginning. And where I'm driving with this is specifically on GE. There's reasons why I would look at where GE is now, and I would say, actually, it's too late. It's too late to do a trade on GE. It's not impossible to make money, but there's some habits here that could be built over time that actually prove to be destructive to the trading account, because it's actually just not in a good spot to get into the stock right now. Okay. However, it is in a fantastic pattern. Star, star, square, star, star, square, star, star, square. It happens over and 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 over again. Okay. So it will not stay in this pattern forever. That's not how patterns work. But this has been a great example of something that's been holding on quite some time. Okay. That is a very good view. What is, right? What is trading? Trading is really a skill set that begins to make sense of advantage and edge in the markets and understands what's going on inside of me so that I can consistently take advantage of that. Now, obviously, education is a huge part of that, because education shows you how to do the things you didn't know to do. See, I have to say, learning trading and then looking back And of course, being able to be a coach for many people out there traveling all around the country, here online in our programs, it's something where I now can look back and go, well, the things that didn't seem so obvious to me when I started, now they're like, oh, that's just as far as a trader goes, it's common sense. But it didn't feel that way for me in the beginning. And what's interesting about that is that there are a lot of things that I know. I'm speaking to people on this webinar right now. There are a lot of things that you just don't know. You don't know. Anybody ever feel that way before? You just didn't know that you didn't know. Sometimes we know that we don't know, right? Like, I know that I don't know how to speak French. Okay. I know that I don't know the word for cactus. I've got a cactus in front of me here tonight. I know that, right? I know there are certain things I don't know, which means, and I know at least a little. When it comes to investing, one of the things I find, when it comes to trading, one of the things I find is that folks just don't know what they don't know, and that there are some incredibly simple yet powerful things. I like to say small hinges open big doors. That if we learn what they are, and then we commit ourselves to learning how to use them effectively, they can have a tremendous impact on the way we engage with our finances using the stock market. Understanding patterns and what to do in between the lines is certainly one of those things, right? We don't get paid to buy the stock. We get paid to manage the stock well and sell it. That's what we get paid for. Anybody can go out and get in a stock, okay? But how do we know when's the right time and when's the right time to get out of the stock? That's the skill set, and that's exactly what I wanted to do tonight. Is just give a little bit of a foundation that we haven't done in some time here on Market Monday. It's a bit of a quiet week for news, which is actually a good thing. When you look at news, remember, news does not tell me the direction of the market tomorrow. The uneducated, uninitiated, and I don't say that in a condescending way, it's just a reality, okay? The uneducated, uninitiated, often when they're invested or interested in the markets, they look to the news to tell them what's going to happen, usually so that their fear will subside. And it never works. It never could work because the news is not a crystal ball. To the educated, news is a tool that helps me understand how much risk am I taking to trade right now. Students in our program understand that when they spend time around coaches who are constantly assessing the markets, we really only focus on one or two major news items at a time, and we pretty much forget everything else from there because there's really only one or two major news items that are moving the markets in a significant way at any given time. So we're just going to focus on those. The old saying, if you spend more than 10 minutes, I'm getting the saying wrong now. I've said it so many times. That's funny. If you spend 12 minutes looking at financial news, you've wasted 10 minutes, right? I change the number every time I say it because I don't know what the original number was or who's credited with the original quote, but it's powerful to look at. Actually, most people spend a lot of time reading financial news if they spend time looking at the markets at all. And most of that time is wasted. Okay, we don't want to waste time. We want to save time. That's why we do this. So news needs to be really dialed in. Point being, though, there are aspects of this that I believe any person can learn, but you've really got to understand the process that you need to go through to be able to do that. Now, I got a couple other things in here. Let's go ahead and, all right, looking at a stock like this. And what do we do? Just going to technically see what's going on here, right? Something like that. First thing is earnings right around the corner. So for me, earnings is a big consideration, as I talked about earlier. So that one would be really close to earnings, which is going to put on a significant amount of risk on that stock if I'm in that around or even into earnings. Okay. This guy here, see, the first thing I do is we'll learn how to actually go in, identify patterns, and draw lines so that we have the floor and the ceiling. Okay. Once again, earnings. Okay. Really close. That's going to be what that was today. So let's see, was it? Yep, it was reported after the bell. So this one's going to gap most likely, not for sure. It's not a guarantee, but it's probably going to gap overnight because of the earnings report. And so that's another one that's going to be really, really close. We're in earnings season, right? That's one of the big news items that you have to watch out for right now. See, that's one thing most people didn't know they didn't know. There are a lot of things that when I teach people, they realize, I didn't know that. It's not just knowing, it's knowing that they didn't know. Okay, one of our coaches worked for a major corporation that's no longer around for decades. Okay, he's now in his retirement and had a significant investment from the course of that career. And this particular company had a stock that they gave to their management employees, and it appreciated and did very, very well. Okay. But this individual did not know. Nobody ever told him. He didn't know what he didn't know. Nobody ever said, hey, have you ever heard of a stop loss? And he did not use a stop loss on this particular stock. And when you add in the scenario I mentioned regarding emotions, if your stock was at $100 and you thought, you know what, I'm not going to sell it, but I'll sell it at 105. When it gets to 105 and it goes to 95, you go, well, I had 100. I don't want to sell at 95. I had 100. I've been holding on to these shares for 20 years or 10 years or 30 years, whatever the emotional attachment is. And then when it goes back to 100, then I'll sell it. And then it goes to 90. And you go, well, geez, now I'm at 90. I had 100 and I was going to get 105, which isn't even actually true, is it? And 95 is looking a little better now, but I'm at 90. Okay, once it gets to 95, then I'll lock that in. And can you imagine where I'm going with this? Okay, before you know it, stock has dropped significantly. And the pain of liquidating when it could go back up, only to find that in this particular instance, that company went out of business and it wiped out a retirement. Why? Because this individual didn't know what he didn't know. My question is, do you know what you don't know? And I'm not just being intellectual or wordy for the sake of it. You know, what don't I know about my money? Because our goal here at Tradeway is empowering the individual investor and trader to take control of their money. And we have to start with what we don't know. Okay. This particular stock, the reason I say that again is because it's right on earnings. So tremendous risk there on earnings. Not a half bad couple of patterns though, right? I have to say you got some good patterns there. We just got to see how earnings shakes out. Okay. Appreciate you guys being on here. Thank you so much for being with me tonight. That's it for Market Monday. Of course, we're back next week, and I look forward to seeing you guys then. If you need anything at all, you can always email us, support@tradeway.com, care of Market Monday, and they'll send that on over to me. Appreciate you guys so much for being on. We will see you next week. Good night.